So look, we got Bitcoin's price going through what some people are calling a flash crash. We're going to talk about the best investment strategies for cryptocurrency. We're going to dive a little bit deeper into that and get into diversification. And then finally, we're going to wrap up with, if I had $1,000, this is how I would build a crypto portfolio. What's good? Welcome back to another episode of Where the Money At. We on episode 53. You know we keeping it rocking and rolling, so let's get right into it. We got Bitcoin's price sitting here right at 44,200. We have Ethereum at $2,281. We got BNB sitting at $320. That's crazy. And Solana sitting at 103. And XRP has come down to 58 cents. So let's get into a little bit of technical analysis on what we got going on. Let's refresh TradingView here really quickly. So we had a couple people talking about Bitcoin's price is going through a flash crash as far as yesterday's price action. So let's dive into a little bit of what that was. We got this local range here. We're sitting between 40,000 and 44,500. We go to the top of the range. We go to the bottom of the range. We go to the top, come down. We go to the top. We tried to break through it, and all it was a hard rejection off the top of a local range. So I wouldn't call it a flash crash because we're still in the area of the range, and it's looking like it's trying to push through it. But let's look at the 200 EMA really quickly, and we're coming pretty close to it. So since it's looking like it's trying to push through it, it's looking like the 200-day EMA is going to continue to rise up, and the price is going to go along with it. But if we had to, let's just back out a little bit and look at some of the areas of strong price resistance and support. And we call those the order blocks. So let's just put it in between here and here. So between 48,000 and 53,000, we have another area of a lot of volume going on around here between 31,000, 33,000. And if we want to just take a little bit more of a step back, we have more areas where institutions like to get in and out around 13,000 and 18,000. So if we're taking a look at it from here and it's trying to push through, it looks like if we were to take a positive next leg up in the next couple months for the year, possibly we could be somewhere in between 44,000 and 48,000. If we have a bullish price range, if we have a bearish price range, we could come back down here towards around the $35,000 area. So, let's take a step back and try to form our strategies and how you want to get in and out as safely and as calmly as possible. Because I don't want you hearing flash crash and throw all your money in or pull all your money out. Like let's be rational about this. So we're not going to spend too much time on TA today. I really want to get into the news because there's a couple fun things I want to talk about. I had found this article titled "How to Choose the Best Crypto Strategy for Your Goals." Best crypto investment strategy for your goals. And I was going through it and I was like, oh man, this is basic stuff. And then I closed it out and then I thought about it. I brought it back up and I'm like, no, like it may be somewhat basic, but your investment strategy doesn't have to be complicated. And I was like, this is just really, really sound advice. So we're going to go through it and we're going to talk about the best ways to invest in cryptocurrency. None of this is financial advice. Number one, define your investment goals. So you have to know what you want to get out of this asset class while you're going into it. You may not have to have the ultimate end-all, be-all 40 years down the road goal, but you have to understand what you want to get out of it. Do you want short-term gains or long-term gains? Do you want to day trade or do you want to buy and hold? Figure that out for yourself and then move forward. Understand your risk tolerance. The biggest thing I get from this is don't put more into the market that you're not willing to lose. If you can only lose $100, that's the max you can invest. Put $100 in, and once anything you put inside of the market, you have to be okay with losing 100% of that investment and never seeing it again. Some people's tolerance is $1,000. Some people have the luxury to where they can put $100,000 in the market and be fine losing it. But understand where you are, where your situation is, and understand where you want to go. Educate yourself. This is one of the top two most important things in this list. Educate yourself. Once you invest, do not rely on somebody else's word. Do not rely on one person's opinion on Twitter, Threads, YouTube, at the barbershop, hearsay, your family members. Educate yourself. There is so much information out there. There is no reason why you can't take 10 minutes a day. and research about the cryptocurrencies you're in and just the space in general. You want to be up to date on it. Diversify your portfolio. So if you want to invest solely in cryptocurrencies, there's a bunch of cryptocurrencies you can get into. And we're going to dive a little bit more into that when we get to the next tab. That's what we're going to talk about next, diversification. But diversify your portfolio. So you can diversify inside of cryptocurrencies themselves, or you can broaden it and go into different asset classes, like have a little bit in crypto, a little bit of stocks, a little bit of real estate, a little bit of business. And, think about it in terms of that and how you want to do it. Choose the right investment vehicles. So inside of cryptocurrency, think about it. Do you want to buy and hold? Do you want to day trade? Do you want to stake? Do you want to participate in DeFi projects? And DeFi is just, we have traditional finance where we have the banks and the established people who invest money for us. They have their firms. But DeFi is setting up an environment or an ecosystem to where things are different and we can kind of handle things ourselves. And a lot of these firms that would handle your money and invest it for you and give you a return, a lot of these are automated and it's now in code. So think about that. Where do you want to go? How do you want to make money inside of the space? Consider your time horizon. Are you thinking you want to get in and get out a year later? Do you want to get in today, get in 6 months later? Do you want to get in and get out 30 years later when you retire? Think about that. Stay disciplined and avoid emotional decision making. And I think the best way to do this, because this is way easier said than done. Because think about it. What if you put $100 in and then the next day that is $1,000? Some people will say, I just made 10x, let me get out. Or some people will say, I just made 10x, let me take 50% out, play with house money, let it ride. Or some people may say, I just made 10x, tomorrow I can make 20x. How do you want to do it and have a plan so where you're not basing it off of what happens? You have your plan and you have your set goals and what am I trying to say? Just monuments or achievements that when it hits that part, you take it out. Like say, I want to make 300%. Well, I'll take 20% out when I make 50%. I'll take another 20% out when I make 100%. I may take another 20% out when I make 150%. So you get your 300, you take some. By the time you make 300, you have a good bit of profit. Let's say you never make it to that 300. You know what I'm saying? So that's how you prevent yourself from losing gains that you've made and you're able to lock in some things. Monitor and adapt. So after you invest in these cryptocurrencies, what do you do then? Do you just chill? No, you can continue to research the updates that these projects are having inside of cryptocurrency, and you can adapt to the things that's going on. Because what if a new law comes out that this particular cryptocurrency exchange that you're using to get in and out of your particular tokens is no longer legal in the US? Well, now you have to make sure that you're able to get your coins out, and you need to figure out a new strategy of how you're going to get in and out the market from this point on. So monitoring of that. Factor in regulatory considerations. I was using a platform called KuCoin, and KuCoin has a lot of coins on it, and they outlawed it in the United States. And to this day, I'll still tweet it every day. Losing KuCoin hurt me so bad because there was a lot of coins and a lot of access that I had to that on there. But this is the game. You can't cry about it. You have to figure out how to get where you want to be, because if you really want it bad enough, you'll figure out a way. You know what I'm saying? So factor in regulatory considerations. There's new bills and new laws coming out every day because I'm in the US. We're still figuring out how we want to regulate these things. Seek professional advice. And this is maybe the most important thing. I don't know any professional cryptocurrency firms at this current point that I could just pull up to in my city. So that may be an area of opportunity for us to educate ourselves and push ourselves forward as authorities and people who have knowledge in this space. But yes, I would always recommend that you go seek professional advice, because I am not a financial advisor. So I would recommend you go find professional financial advisors to help you on your journey. Let me make sure I'm sharing my screen. Yep. So we talked about, what was it, number 3 or 4? We talked about diversify your portfolio. So let's talk about diversification really quickly. This is CNBC Crypto World playlist, and we have a gentleman here discussing diversification. So let's get into it really quickly.
So with so much news driving the crypto industry in 2024, what's the game plan for investors? Well, some experts say it might be less about one investment over another and more about investing across a wide range of assets.
What a lot of people choose is diversification. In other words, instead of trying to make a bet as to which approach is better, do a little bit of everything. This way, you are protecting yourself by not making a single bad bet. You'll be directionally correct, own a little bit of Bitcoin, a little bit of the Bitcoin ETF, a little bit of these crypto stocks. If you're doing it in that fashion, no one thing will hurt you, and you'll be directionally doing well along with the rest of crypto.
And I like what he said there. He said if you're going to invest in stocks or just Bitcoin in general, you have multiple ways of doing it. And I have a theory about diversification. So my theory is you make a large bag while concentrating on one thing, and after you have good success in that concentration, then you start to diversify on a major level. Now, I'm not saying on the way you don't diversify. I'm saying you really lock in and make a good bag. So for example, let's say there's multiple ways you can do it. Let's say you save over the years, you save a bunch of money from your job. Let's say over the years you save $100,000, $200,000 plus from your job. Or let's say you do very well in crypto. Like let's say you're in crypto for 4, 5, 6 years, and then you pull out $500,000 fiat. Or you get inside a real estate property, you fix it up, make an exchange, and you make a good profit, or you start a profitable business. And there's many ways you can do it, but I really feel like you make that big bag locking in on one area, and then from that area you're able to diversify. So let's take the real estate example. So let's say you put $100 into a property, you fix it up, and then you're able to sell it for $600,000. You make a $500,000 profit, $500,000. Well, then you can break that $500,000 up into a different portfolio. So like you take 200 and you buy your own home, and then you take 100 and you create a stock portfolio. Then you take that another 100 and then you put that inside of cryptocurrency and then stocks and bonds, and you start another business. That's what I'm talking about. So that's kind of my theory on that. And I just feel like there's power in concentration, and it makes it a little easier to make that bag so you're able to diversify on another level. And then we can get into diversification deeper, like specifically inside of Bitcoin, like the gentleman just mentioned. Like let's say you want to invest in Bitcoin, but you don't want to throw all your money into this one asset that you're not sure about called Bitcoin. Well, how about you buy a little bit of Bitcoin, and then you buy a little bit of the ETF, and then you buy a little bit of these blockchain mining stocks, and then that way you're able to be directionally right. I like that term he used. And then you can take it a level deeper. Like let's say you only invest in cryptocurrencies. How I like to do it is I'll break it up. I'll buy a little bit of Bitcoin, a little bit of ETH, and then diversify into other projects. So there's a million ways to do it, and there's a million strategies, and you have to figure out what strategy works best for you. And that's all we talk about on this channel is strategies, how to stay safe, and we talk about the pitfalls and things that could go wrong and how to prevent those things. But I think that's a very good way to look at it. So let's wrap it up on, if I had $1,000, how would I spend it? So let's do it like this. If I had $1,000, this is the crypto portfolio I would build. I will put 300 in Bitcoin, another 300 in Ethereum, $200 in Solana, $100 in Avalanche, and another $100 on Chainlink. That's how I would do it. That's how I would make $1,000 portfolio today. Now, none of this is financial advice, but I'd say, that's kind of how I like to keep myself safe, because I have 60% of my portfolio in Bitcoin and Ethereum, the blue chips, the low risk. And then I have, another 40% inside of, another 20% inside of Solana, my medium risk. And then everything after that, well, I consider AVAX and Chainlink medium risk too, but then have another 20% in some high risk plays. There's nothing wrong with that. And, customize it for you. And if I feel like everybody should comment, if you had $1,000, how would you break it up in the comments? How would your portfolio look in the comments? But I just wanted to get a quick video out there today. Oh, there's one more thing that I wanted to say. Let's wrap it up like this. A lot of people are looking for cryptocurrency to be this magic ticket that will save them from being broke, and it will not. When it comes to cryptocurrency, you have to put the same amount of research, patience, and time into this asset as you would real estate, stocks, or a new business. You know what I'm saying? You're not going to throw your money into this asset class and it go up 1,000% and you pull it out in a week. You could do that, but this is not a magic pill or a flip. You know what I'm saying? You got to change your mindset about it, because once you come into any asset class thinking with that flip mindset and try to throw some money in and try to get out really quickly, that's when you subject yourself to lose a lot of money. So I'm gonna wrap it up on that, man. As always, I appreciate y'all for rocking with me. Hit that like button, hit that subscribe button, and we're gonna continue to rock out.